You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you SPKEX volatility products. SPKEX options and futures are traded on the SPKEX Volatility Index, SPKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about SPKEX at myaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever scintillating, ever insightful, at least we tend to think so. Hopefully you agree, judging by the numbers from November and throughout the entirety of this year. A lot of you do agree. So we appreciate all of you folks beating a path to our doorstep and, of course, driving up our bandwidth bells. We love you all out there, even if you are a pricey bunch. We love you all. Of course, you like what you hear on the on-demand side. All we ask is you do keep rating and reviewing wherever you get the show. If you don't have a platform that allows you to rate or review, the app stores for our network app, iOS, Android, Kindle Fire, you can all rate and review there. A lot of people like to leave their reviews there as well. They view it not just as a review of the app, but really as a review of the network. So however you want to do that. And of course, if you want to go above and beyond, I just checked the other day, nearly 200 exclusive pro episodes on that exclusive pro podcast feed now. So you got a lot of great back content. And then, of course, you got a freaking bonanza of content hitting you in the face every week. Like this week, it's like quadruple pro week because you already had a great pro Q&A with none other than Mr. John Smolin. We got into some interesting controversial areas, including those very controversial bin Laden puts that conspiracy theorists have thrown around for years, went up before 9/11. We got into that and all kinds of fun on that far-flung pro Q&A, as well as, of course, options oddities coming up a little bit after this show today. And then because we like you folks, and because I don't have enough to do, we have another pro Q&A after options oddities today with none other than Uncle Mike Tusaw, because he wanted to get at you folks as well before the end of the year. So we love our pro folks. Glad to see so many of you folks are loving it as well. Where do you go to show that love? Theoptionsinsider.com/pro. is the place to go to learn more. Or for you cool kids out there, you want your own URL, I got you. /secret club. But yeah, don't share that with anybody. It's just for you, that one person listening, not the person next to you, just you. And let's see who's joining me next to me, proverbially here, on the old panel here today. We have the rockingest of lobsters himself, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, Welcome back to the old Vol View show, sir. Not a lot of vol to talk about, so we can maybe just cut the show off right here. What do you think?
Yeah, I think let's just end it. Let's turn the show off.
I got other stuff. I got other stuff to do. I don't need to be talking vol for an hour. But I guess if you twist my arm, I guess we can make it happen as we keep on rolling right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Welcome to the Volatility Review, the portion of the show where we break down what the heck is lighting up our tape. And ever since good old Jay Powell and his cronies just gave a nice groin shot to the market earlier this week, listeners, we bounced around a little bit that day. We sold off, then we rallied, and we ended up selling off towards the end of the day. Not much. And then, of course, yesterday we took a nice gut punch to the markets. Folks like Uncle Mike, our perma bulls, had a single tear in their eye. And he was talking about maybe could we stay glued to 3,900, and then coming into showtime again today. The answer, at least for today and for this week, appears to be no. S&P off another about 1 2/3%, nearly 65 handles to the dark side. So about 38.30 or so as we're kicking off the show here. So well shy of that 3,900 level. We're going to revisit the 3,600s and below. We shall see. Not a lot of rays of sunshine out there for the bulls right now. Dow off about 1.5%. NASDAQ only off 1.4%. So a rare day where NASDAQ is actually the laggard, even though it is ever so slight out there. They are coming for all the big NASDAQ names again. Tesla continues to just shed market share on a daily basis. A 150 is where they hit this morning. That bounced right off the 150 level pretty much exactly. Of course, Tesla dragging a lot of those high-flying tech names down with it. The range on Tesla this year, 402.67 on the upside, 150 on the dark side. So, man, a lot of living to be done out there. On the high-flying tech front, let's see how all this is being reflected in the vol market. And I was saying this yesterday on the option block, only half jokingly, but if you were out here looking for this big pop in vol as a result of the Fed, remember, we had a big pop in vol earlier this week. We came into the Monday episode of the option block, and VIX was around a 24 handle. It was crazy. We saw a lot of juice being pumped in ahead of the Fed. And I've said it many times, the Fed is analogous to an earnings event for the market. We see a lot of event risk being pumped in, and unless something extremely unexpected happens after the event, you're going to see that balloon pop and a lot of that vol come crashing out. And that's pretty much what we saw. And then, of course, we have continued down ever since. So we have seen a little bit of vol come creeping back in, but nowhere near the level of upside that I think a lot of the folks who are maybe piling into some VIX and spikes upside were hoping. Coming into the start of the show, we had spikes at 22.20. Again, reflecting just how much vol was being pumped in ahead of the Fed last week. Spikes is still down on the week, 1.3 points. Now, Spikes is a bit of a weird bird because there's some premium and some other things going on out there with the way it looks at the weeklies. And we've had Matt and Tom discussing that, and Simon on the show about around this time of year, we do see Spikes disassociate a little bit from VIX, but still, it's net down on the week, which should tell you something out there. And then VIX cash at about a 23. It's up, but only up slightly, up 0.6 of a point from where it was this time last week. So we were at about a 22.40 going into the weekend last week. So the market was preparing for a lot of juice post-Fed. Of course, we got what everyone expected, the half point. It just was the comments afterward and the now continual downside. So if you were betting on a big vol pop, and I was betting on a little bit more upside from a crystal ball perspective, but not a ton. So we'll see how that all plays out a little bit later in the show, listeners. VVIX looking a little bit frothier this week, 93 right now, up about 8 points. So that's starting to get up in the range where it's starting to make a little bit more sense. When it was languishing in the low 80s, high 70s, you knew it couldn't hang out there for very long. And this week it has not. The Viking, our old friend V-Spikes, 113. That's up 12 points from this time last week. Again, the range we've seen on that product since its launch about a year ago now was 57.25 back not too long ago. October 28th was the low for vol of vol, and the high was last December, 204.31. So we are kind of in the middle of that range right now, and actually a lot closer to the low than we are to that crazy high up there. So interesting stuff out there. Again, you can find all that for yourselves. Spikes, V-Spikes, all that good stuff. TheVolatilityHub.com, the new hub that Simon just mentioned on the show a couple of weeks ago. All right, Mr. Rock Lobster, that's a whole bunch of table setting. You can now sit down and feast, sir. What is catching your eye from a somewhat muted vol perspective this week, sir?
Well, once again, bizarro land as far as vol goes. So into the Fed announcement, we had a recent low for VIX, which I think, what did we trade down to, like, I'm going to say 21.5. But the VIX future was quite low. Yeah, into that Tuesday, remember everybody was pretty happy on the CPI number? 21.5. And since then...
we had that brief ray of sunshine.
Right, we rallied 10 handles on the open, right? And we had 21.5 low. And I think, where do we touch? 4,000 SPX? Something like that?
We kissed it.
I believe that was the number. We were north of that number. Yes, we were unbelievably 4097 SPX. And since then, we are down. We're getting close to down 4,100 to 3,800 is 300 handles. What is that, 8% from peak to trough?
Irrational exuberance, sir, strikes again.
And now we're just back into what I would call the Tucson Palookaville, right? Things aren't terrible. Things aren't great. They're just, I think people are I guess the problem is everybody has been so conditioned by the Fed over the last, and I will blame the Fed. I will blame Bernanke and Yellen and Powell. And I will blame the knuckleheads in our government for spending money that we don't have, like drunken sailors. And we'll all pay for it one of these days. But you can see what happens when the Fed has such power to move stocks higher when they just decide to. I mean, I don't know how they don't trade on this information, to be quite honest, because it's so ridiculous. But it's almost too big a temptation. But you see what's happening, and you're like, oh, okay, now are we going to function as a regular market where, okay, rates are higher, the government has to spend less because it's going to cost more money. Still waiting to hear something from Congress. They passed another ridiculous bill just yesterday, I think, right? The omnibus spending bill. Like, no sense of what is going on. I mean, I swear to God. Do these people even look outside the Beltway at anything that goes on in the world? It is beyond all comprehension. Anyway, I'll get off my soapbox. But from a volatility point of view, once again, market, they crushed the vol in, waiting for Powell's announcement. The straddle was still $9 bid for the week. And once again, it shows that the straddle was cheap because we had $90 bid, and we had the 40-50 is now at a $200 move. So it was $100. We had a $200 move. So again, once again, and this is where I think the listeners, talking about vol, I think you have to separate gamma from vega, or gamma from, like the actual. Your contracts moving in the short term is one thing, is one Greek. And how the market views volatility 30 days down the road is another. Your vega and gamma part need to be separated. So like right now, everybody's like, why isn't VIX reacting? Well, VIX is already, near the top quartile of vol at a 23. SPX is down 1.5 adjusted. Or SPY is down. We're down 1.5% SPX. We had the divvy come out today in SPY as well. So the market is moving about how VIX. Remember, VIX is pricing a 30-day average for vol. It's not today's vol. So the straddle is quite happy being 200 points right now because, once again, if you look at the 30-day straddle, it's $200. That brings you down to 3,600 SPX, or brings you back to 4,000. Which, given what we have, we've got no more Fed changes till February. I'm sure they'll keep talking, right? There's nothing really to prop the market up. And and then we just had, again, another ridiculous spending bill by Congress with no concept whatsoever that their spending contributes to the inflationary cycle we have. Right? If we actually saw something that was positive, that would be great. But they're all, I don't know, both parties, whatever, just politicians in general, dead from the neck up. So as of right now, the market really doesn't have anything to lean on, right? There's no, I don't want to be, I think there are going to be bargains, but once again, we're on that slide down to 3,600, slowly but surely. I thought, wow, you know what? Like, inflation's coming in and things will be better, but it appears the more the Fed they continue to, they have to talk, talk rates higher to try to put people in that inflationary mode. So I don't know what their end game is. I guess they just want to get rates to 6%, get a little closer to the PPI, and then see what happens from there. Until inflation starts to get back down to earth. Inflation will not get back down to earth until the government stops spending. So, a lot of us, and Tusa, you and I would talk on the show for the last several years. Like, when is all this spending going to catch up with the market? It's got to be eventually, right? And it just took a long time for that to happen, probably longer than people thought. Throw in some other policy, government policy that sort of exacerbated things, and then you get it. So from a vol point of view, I think just vol is fairly priced at this point. I don't think VIX is terribly underpriced or overpriced. And the reason why we were even talking about it on Option Block yesterday is, if we don't have that snap rally, that 5% rally potential, it's easy for vol to come in, right? It's easy for VIX to come in. The upside volatility compresses a little bit. And also downside vol, there's not the huge demand for it because people aren't seeing 3,000. They're just seeing meh. And, meh, when you're already at a 23 vol, it's hard to press. In order for VIX to go higher, you need continually, like what we call accelerating down moves or accelerating up moves. And I don't think we really have acceleration. We just kind of have everything sort of dragging down. So that's I think the market for volatility we have. We also have pretty much a normal, besides the December cycle, in VIX, you have kind of a normal contango in the curve. So, you have that, and it's hard to get, it's hard to make vol really, work itself higher. Because what you have is you have an expectation of short-term volatility is a little lower than the back end. And right now that's enough. So I think what the more interesting trade is like short vol, short SPX. This is almost a perfect time for it because you have huge contango in the futures. If any news gets better, vol can easily come down. But, the January futures trading at a 25. That's pretty pricey. February is 26. So like that to me right now is an interesting trade because there's room for vol to come down if we actually, we don't keep moving at the high rate that we discussed. Remember that 6 month vol of, 24, 25, 26 in SPX. It's like, well, it's not quite gone away yet. So I think, that's what we have as a condition for vol. And I don't think it's going away anytime soon until there is some sort of, coherent policy to sort of actually get rid of inflation. And that is again, to reduce government spending, reduce the printing that's going on, and all the junk that is exacerbating these problems. I mean, the state of Maine handed out $800 checks to all citizens, right 2 days before the last election, or a week before the last election. And all that money came from the Fed, basically a direct handout from the U.S. government to the state. And then they just gave it to people. So clearly nobody has read the inflation playbook at various levels of government. So from a vol point of view or a market point of view, yeah, would it surprise me if we got back to 3,600? Nope, because the Fed threw cold water on everybody's dream of rates coming in. And I was like, okay, I thought maybe we will hold 4,000. The Fed's not going to have to be as aggressive. And then, Powell ran on his rant again. So until we have the next rant, a change in rant message, I think we're gonna see exactly what we're seeing today. Multiples come down. Vol catches a little bid, not a huge bid, and the market just is weak until something changes what we see.
Let's see what we are seeing out there right now. Let's get into some of the flow out there. Listen, let's start in the land of the futures and our old friend, the vol surface, the VIX futures term structure. Front portion up slightly. Weirdly enough, we're seeing about the same level of bounce for the front two contracts. Usually we see the front contract move a little bit more than, let's say, 1 month out, but not this week. We're seeing both D's and Jan, the front portion of that curve, up pretty much exactly half a point coming in this week. So intriguing stuff. Looking farther out on the curve, listeners, looks like the highest we get all the way out to August next year is right around 27.5. And that high point, that high watermark for vol is next July. So intriguingly enough, the term structure pricing in a little bit of juice in a period not seasonally known for a lot of vol. So that's certainly interesting as well. Mr. Rock Lobster, sir, anything catching your eye out there in the land of the VIX futures?
Well, yeah. I mean, you have this kind of an average contango. You have an average kind of a normal looking curve for volatility in zone 4, which it has been a symptom of like this post-COVID market. I think we're kind of back into it again. So that puts pressure on. It's bad for products like UVXY. It's bad for products like VXX. It's good for products like SVXY if the market basically stops going down at some point. But there is a ton of juice in there, which eventually can be harvested if VIX stops moving a little bit. But at least for right now, it's not. I mean, SPX is down, almost 2% today, 1.7% at this point. So VIX is not going to go down for sure. So, again, the rubber band now stretching the other way. But you are seeing here, and you're printing. Let's see what the print is on some of the lower priced or the shorter term options. So you're seeing like the D's 27 cycle. Again, these are all adjusted for holiday and the holidays. But 1886, 19 volatility here on the D's 29. D's 30 is 1811. The first cycle of the year, 1859. So all those vols have been adjusted, to take account of the holidays, just like the back end. But, you're only seeing vol in the teens, right? I'm sorry, but like a 17 here. If you look at the December for next week, right? December 23, okay? That straddle is for next week is 80, is 80, $84, $85. And SPX is down $65 today. So, I mean, the short term, like the gamma part is pretty low relative. And that's what gives you kind of the, shorter vol, it's lower. So vol in the front shorter, that makes the forward vols higher for the futures. So for the VIX futures. So you're kind of seeing that. So the market is not looking for, just like you said, we got the holidays, But the market's not looking for, any of the weekly straddles, the daily straddles. They're not looking for a whole lot more than 1% fall. But I have to say, we have a lot more than that every day. So, the listeners can take that what they will, but I still think the weekly vol, the daily vol, still feels a little bit underpriced to me, to be quite honest, because I don't think the market's done moving. I think the 23 VIX is probably fairish, but again, that's 1.5% per day on average. So I think there's some value in the short-term options still for SPX and SPY and the big indexes.
Let's see what kind of options are changing hands out there this week. Listeners, on the vol front first, let's go out to spikes. And looks like someone's really loving themselves. The DS28's seen a flurry out there, so they have grown by about 3x in terms of OI since our last show. So that's interesting. Also, not the usual type of paper we see out there in spikes. Recently, we've seen pretty much deep in the money calls and deep in the money puts. So seeing some, shall we say, old school DS28s flowing in there. Kind of interesting. Obviously, some folks are starting to pick up on the product. Number two, we've got the DS26s. So now we're starting to see some, shall I say, normal paper out there. Number three, we've got the DS25. So there we go. Top three, all relatively reasonable contracts, relatively reasonable strikes. Number four, now we get to the fun, the DS10s. Number five, we have the DS20 puts. So there are some puts to be found out there, but none of the fun in the money kind, the way we used to see out there. Flipping the script to VIX options right now, listeners. And it's a little bit of a different story. In fact, it's a weird week. We're seeing a lot of paper on the tape, 481,000 contracts on the tape right now in VIX land. List actually, it just jumped up as I was just re-racking the numbers here. It jumped up to 498,000. So we're closing in on 500,000 contracts. In fact, every day this week was north of the ADV out there. And yet, for whatever reason, the ADV is continuing to erode. It's down to 518,000, down another 25,000 this week. I'm not quite sure how we beat the ADV every day this week, and yet the ADV is down, but c'est la vie. You'll see for yourself in a little bit, listeners, when I break down the week. First, let's break down the top 10 positions out there. It has been 10-0 calls over puts out there for quite some time. The last week or two, we've seen one put slot in there. It's been 9-1 calls over puts, and that remains the case this week. A lone put stands to vie against all the rest of the calls in the top 10, listeners. Let's see if we can play the Where's Waldo? Where's the put in the top 10 this week? Number 10 cost you 151,000 contracts to break into the top 10 this week. That's actually pretty heavy for VIX. That gets you to the D's 40s. By the way, total of 11.1 million contracts outstanding. So VIX is looking pretty frothy out there right now. Number 9. Oh, there it is. Our first and only put in our top 10 this week. 154,000 of the D's 19 puts. All calls the rest of the time, listeners. Number 8, $1.54 as well of the March 80s. Here we go. Now we're back at it, listeners. Good old March 80s. Number 7, right behind it, 157,000 of the D70s. Number 6, 161,000 of the Feb 70s. Number 5, $1.68 of the Feb 80s. It just keeps going, listeners. Number 4, $1.84 of the D's 35s. That sounds fun, but it's against the 1x5, so it's related to this far out of the money paper we're talking about here. 184,000 of those D's 35s to number 4. Number 3, 210,000 of the March 75s, but of course. Number 2, 222,000 for number 2. That's a lot of twos, listeners. Of the Jan 70s, and not to be outdone, still number 1 with a bullet this week, listeners. 376,000 of the D's 30 calls out there. Before you start saying, oh, that's so normal. That's part of all that fun ratio upside paper we've been seeing out there, listeners. Let's see what kind of paper we're seeing out there today and through the rest of the week. And you could tell me if you think the ADV should be down 25,000 contracts after all this. Friday, today, 498,000 contracts. So just a tick under 500,000 contracts already, listeners. So seems like a pretty robust day to me. The big dog today, 42,000 of the D's 20 puts, followed by 31,000 for number 2 of the D's 19 puts. Number 3, 25,000 of the D's 35s. Number 4, 24,000 of the D's 27s. And rounding out the top 5, 23,000 of the Feb 30s. 20s, 19s, 27s. The craziest strike we have here is 35. This is, dare I say it, the most normal top 5 we've profiled on the show in months. Interesting. I'm used to seeing the 80s, the 70s, the 110s, all sorts of other fun. So normal strikes make it into our most active today. What's going on with the world? Let's go out to Thursday. 852,000 contracts on the tape for Thursday, listeners. So a pretty active day, but not the most active day of the week. No. The big dog on Thursday, almost 50,000 exactly. Oh, our old friend, Mr. Rock Lobster, the June 15 puts. Oh, now we have to go see. I have to go see what he was up to out there. I'll go look while you're talking later to see if he took some off. Our old friend, the June 15 puts, just riches for days abound on that strike. The Rock Lobster and I both have tons of them. And what has happened to all that good June downside as we've sold off involved? A whole heck of a lot of nothing, because it's June, listeners. Number 2, 47,000 of the D's 21 puts. Number 3, 45,000 of the D's 22 puts. Number 4, 41,000 of the D's 20 puts. And rounding out the top 5, 41,000 of the D's 30 calls. That should also tell you something, listeners, about the weird, quote-unquote, underperformance of vol this week. We had a day like yesterday where we were selling off hard, and 4 of the top 5 vol trades were all puts. So that should kind of tell you something. Usually in that environment, past his prologue, we see the market selling off. We would see VIX popping, and we would see pretty much all 5 of those would be calls. Yesterday, not so much. Again, kind of showing the weird vol environment that we are all in right now. When you go into a Fed announcement with a whole bunch of juice already baked in, kind of hard to get a lot of upside afterward. Wednesday, almost 1 million contracts who got within spitting distance, listeners. 992,000 contracts. That was, of course, Fed day. That was the most active day of the week. Even with the Fed behind it, in the most Fed-driven market I've ever seen, couldn't kiss 1 million. Got close. Got within spitting distance, but couldn't quite get there. 992,000. The big dog on Fed day, listeners. What was everybody slinging on Fed day? Well, it was the D's 19 puts. 130,000 of those bad boys going up out there. So a lot of love, a lot of action on the D's 19 put strike, followed by 69,000 of the D's 20 puts for number 2, 60,000 for number 3 of the D's 21 puts. Number 4, 31,000 of the D's 23 puts. And rounding out the top 5 again. The day before, we were 4 for 5. Wednesday, we were 5 for 5. All puts, 30,000 of the D's 22 puts. That just kind of shows you what a crazy couple of days we had out there with the Fed. Tuesday, leading into the Fed, of course, 753,000. So 750,000 contracts. Do you see now why I'm starting to say why the ADV going down this week doesn't make a heck of a lot of sense? 753,000 on the tape for Tuesday. The big dog on Tuesday. Oh, we got some calls in the mix finally. 75,000 of the Feb 75, so number 1, followed by 68,000 for number 2 of the D's 21 puts. Number 3, 31,000, so we fall off quite a bit between 2 and 3. D's 22 puts for number 3. Number 4, 31,000 as well of the Feb 35 calls. So there's our old ratio friend again. And rounding out the top 5 on a pretty active Tuesday, 28,000 of the D's 25 calls. Let's go out to Monday. Monday, 705,000. Let me just reiterate there, listeners. Monday, 705,000. Tuesday, 753,000. Wednesday, 992,000. Thursday, 852,000. And today, already 500,000. And the ADV this week, down 25,000 to 518,000. I don't know what they're doing out there. Monday, let's see, 705,000 contracts on the tape. 66,000 was number 1 on Monday, the D's 30s, followed by number 2, 55,000 of the D's 26 calls. Number 3, 55,000 as well of the D's 21 puts. Number 4, 33,000 of the D's, 39,000, of the D's 23 puts. And then number 5 is 33,000 of the D's 22 puts. So we had a few calls percolating in there on Monday, but it was mostly puts all the time there too. Mr. Rock Lobster, a lot to unpack there. Normally, like I said, if past was prologue, we might see a lot more calls dominating the tape. The last couple of sessions, we have not. It has been all puts all the time. And some interesting pockets of liquidity out there, including our best friends, the June 15 puts.
Well, I mean, you look at this, and I think this kind of tells the story of the week. I think folks were looking for a lower VIX. They weren't looking for Powell to continue to beat the drum. But I have to say, like, the guy has pretty much been consistent. I think, he does not want to go down as the Fed chairman that, initiated hyperinflation and disasters and, all that kind of stuff. So he has to fix a big problem. And the big problem he's got to fix is is government spending. Like he hasn't come out with amazing as he hasn't come out and said he is. So I know I keep banging this drum, but like, you know, it's to the point where what's the federal debt? 27 trillion, and the U.S. equity market is 40 trillion. So it's like all of a sudden, you know, in the last 10 or 15 years, government debt has blown up huge relative to listed equity. I know there's property and this and that and all the other stuff. And the government does have, assets that are probably trillions of dollars, but, 6-7 trillion bucks, something like that. But at some point, like I said, the ship has to be turned around. And right now, the equity market at least thought there might be some sort of light at the end of the tunnel, and there isn't. So a lot of the put buying this week was on, hey, there's going to be some light at the end of the tunnel for rates going up. And I think he made it pretty clear, like, until people's grocery bills start getting cheaper, I don't think we're going to see that. He's going to keep kind of bumping it up here until something happens. So, and I think that's the VIX tail. And also the tail is you're seeing so little call volume on the upside. Remember we used to see some crazy volume. Remember a lot of the hundreds and the 150s and the kind of the goofy upside. But look where all the volume was concentrated. 21, 22, 35, 25, like right, very near the money. You weren't seeing those big prints. And so that's what I see with how vol is acting. The paper is more malaise style trading. It's not like explosion trading. Now, all that could happen with something dumb in Russia or anything, there's always overnight news that could change how things look. But like the paper you're seeing around the money is more, okay, we're going to grind. Like I'm going to buy VIX puts because we're going to grind. I'm going to buy close to the money calls because I don't think that rally is going to be as sharp. So it's definitely it's a thing, and the thing has not gone away. Let's just put it that way. So it's interesting to see how that's all going to play out.
I was just looking while you were talking, Mr. Rock Lobster, how this saga of the June 15 puts have played out. Remember, it first came on our radar a few months ago, Mr. Rock Lobster. It was October 20th, to be precise, when we saw 100,000 of those going up. And we both thought, kind of stroked our chins and said, those are interesting. So I went out and I pennied their 100,000 lot just to annoy them. And I got some off. I think you bought some as well. Since then, that we've seen vol do pretty much nothing but sell off. Those puts haven't really budged. They're still about 7 cents at a dime. And we saw since then, Mr. Rock Lobster, we've seen, this is another thing that frustrates me about what goes on out there. We saw 50,000 more trade exactly a month later, pretty much on November 23rd. 50,000 more trade this week. And the OI is unched at 106,000. The OI hasn't changed since that initial 100,000 lot. So somehow they managed to trade 100,000 more contracts in the last month and do literally nothing. That drives me crazy when they see those. It's like that weird market maker to market maker thing. One guy's opening, one guy's closing. It makes the OI stay unched, which drives me nuts because obviously there's economic activity going on there. But it's just, it's frustrating. So there are more of these puts going up, Mr. Rock Lobster. But according to the powers that be, nothing has transpired on that strike, sir.
Well, what's funny about this is it's hard to believe that we are writing off the possibility of, we're writing off the possibility of VIX ever seeing the 12 handle by June or July of next year.
If we keep up this pace, we could be there in a 15 handle in a couple of weeks.
I mean, but it's very funny that's kind of the, from a sentiment point of view, what we've got. So I think, again, very, very interesting overall as far as, where and it's like right now, right? Like, so for the January contract, the 22 put is, less than a buck for VIX. So, the thing about VIX is, it trades in such a it is a reverting product. So the fact that, we were just 21 and a half, and the 22 put is only 86 cents. It's like there's very little bid for that downside vol. I mean, those puts were, I think, as high as $2.25 this week. So there's very little appetite for that vol. Nobody's buying them. So I find it, again, it's interesting that the market is, I think it's shifting focus a little bit to the upside right now. But, that's a very long time when the cash is only a point away to buy those puts for 86 cents. It offers a tremendous amount of leverage. It also says that, when you look at this volume, traders don't think we're going to spend a lot of time near 20 between now and January. Now, of course, that could be totally wrong. But when you look at something and something is so crushed, and you just stand in the Intel pit, and you see people write a jillion puts into the dirt, they're like, we're never going to get there. We're never going to get there. So it would not surprise me if we did not, again, that we don't see a lower VIX. It would not surprise me at all at this point if it doesn't get to 20, even though all of the 2 week out volatility is already in the teens. So VIX is saying one thing to January, and short-term vol at the money is saying something else, and VIX future is 25. So again, that's another reason that the puts are the 22 puts are so low, is because the underlying futures trading over 25, which is a pretty large number. Again, probably it's from the holiday a little bit. I expect that to come down a little, probably back to 24 after Christmas. But if VIX doesn't move, but it's an intriguing bunch of pricing. Like those puts are like siren songs to me sometimes, just because from a relative value point of view, they're so inexpensive. And that's what makes them a fascinating, makes them an interesting trade, and using them to leverage, right? Like, so right now the trade well, that's what I have on, but I'm leveraging those puts. I'm long SPY put spreads, it's a fantastic week. And I'm long those puts as my long delta. So the fact that they're really not going anywhere, SPY rips up, I would need a VIX to go down. So I do that in a ratio, and the trade works pretty well a lot of the time. Sometimes you have to kind of grin and bear it when you have those 3% rallies, but generally things come back down to earth one way or another. So again, interesting pricing, very close to the money, very close to the cash money, not to the future money. Because remember, all VIX pricing is done off the future, and then that future becomes the cash as you get to expiration. So, the 25 straddles $5. So there's not a lot of expectation of a move much below 20. Once again, for I don't know how many cycles we had in 2022, but I think we only have one cycle that closed below 20. I have to check, but I'm pretty sure we only had one VIX cycle close below 20 here. So I'm just confirming that, but it would not. Let me see here, the VRO. And let's see here. If I look at a chart, how many cycles for the year did we have? So in 1 year, I'm putting my line at 20. So from a VRO point of view, we had, again, looking at the VRO, we had one, at the beginning of the year, we had 3. In April, we had 1. So in January, we had 3 below 20. In April, we have 1, and we have not had one VRO below 20 since April. I think Dr. VIX can confirm that, but that's pretty much what we have here, which is pretty amazing, to be quite honest. And the funniest thing is when the Fed said they were going to, start raising interest rates because, inflation wasn't transitory anymore, and they stopped the QE program in November. I mean, that's almost a top tick for the market, for everything, for all stocks. And since then, it has just been a one-way freight train to Palookaville pretty much. But for VIX not to print below 20, have a below 20 settle in a whole year, or since the beginning of April is pretty amazing.
All right, we've been gabbing on. I've lost all track of time here. I'm having fun with the show. It's a fun show today, and we're already coming up against it here. So let me bang out some of these other products here, listeners. We got our friends out there on the Spikes ETP universe, not doing a heck of a lot this week. SPKX 2330 up a whopping 1/10 of a point on the week, listeners. That again shows you how frustrating it is for you folks out there who want a lot of upside and vol this week. Not exactly happening. SPKY, our levered friend, up 0.15 this week. Neither of them really doing a heck of a lot of paper. ADV on SPKX 11, the ADV on SPKY, good old Sparky, at about 19 out there. It's not a ton of paper out there. SVIX, our inverse friend out there. And again, I've said it before. It's like the only person who likes it out there is the once and future Dr. VIX. He loves it. Doesn't really touch the options except to override. He's more into the underlying, but not a heck of a lot of love, except for today. Seems like we got some options paper finally going up out there today. But then again, I've told you, it's kind of sometimes a weird frame of reference for when we do this show. We obviously do this show on Fridays. That's also obviously the one day of the week that a lot of these ETPs actually trade. It's their weekly expiration. So we see these explosions of paper. Like today, SVIX has done 2,000 contracts. That's a ton of paper for SVIX. That's usually two plus days worth of volume. All has gone up today, but the ADV has continued to erode. It's down to 950,000. What's trading out there today? It's the DEES 14s, almost 1,000 of those today, followed by the DEES 13s, about 600, and then 400 of the DEES 14 puts. So all right around the at-the-money strike list. We're hanging out at a 1360, down a whopping 0.2 of a point. So there you go. Again, SVIX, inverse vol product, a week where vol you might have thought would be up, given the context, and SVIX is only down 0.2 of a point on the week. So not a lot going on out there. In terms of action, really quickly, the top positions in SVIX. Number one, we have 2,300 of the Jan 14s, followed by 1,600 of the DEES 13s. Number three, 1,200 of the Jan 16s. Number four, 1,200 as well of the Jan 6 puts. Only put in the top five. And number five, 1,200 as well of the DEES 12 calls. UVIX, everyone was asking, hey, are we going to get the reverse split? And this week, the answer is no. Excuse me. We saw it coming into showtime at about a 7. That's up a whopping 1/10 of a point. That's all we got, listeners, on the week. A 1/10 of a point for UVIX. And it's given most of that back during the course of the show. It's back down to about a 690 now. So it's pretty much unched on the week. In terms of paper, though, a little bit of a different beast. Actually seeing some paper out there. 4,773 contracts on the tape so far in UVIX. And the ADV... that one's moving in the wrong direction. 6,300, down 700. But again, we're seeing this explosion of paper out there. So it is kind of distorting when we talk about them only on Fridays. The action out there today, the DEES 7s doing 500 contracts and the DEES 7 puts expiring at the end of the month also doing 500 contracts. That's 1,000 of your 4,700 contracts. In fact, the 7 strike popular out there, the DEES 7 calls, 2,880. That's the number one position out there in UVIX. Speaking of the real reverse split candidate, though, obviously out there, everyone's waiting for a UVXY. Rock Lobster and I want a nice 10-to-1 reverse split. That would be nice. UVXY listeners literally unched on the week. It was 775 last week. It is 775 again this week. So this product that can do nothing but move and usually go down has done not net on the week. Again, showing you just kind of what a weird week it was from a vol perspective, listeners. 183,000 contracts on the tape. So UVXY starting to get it's a little bit of its mojo back. Remember the days when it was up there vying for not quite the top throne, but it was up there doing a fair portion of what VIX options would do on a daily basis. The ADV continues to go the other way, though. 221,000 down 19,000. Then again, remember I said the ADV numbers this week are a little bit wonky. What's the top position out there in UVXY right now? 24,000 of the DEES 8 calls. So expiring today, we're at 7 3/4. Man, there's going to be probably a lot of heartbroken folks out there, given the fact that a lot of people like to buy premium in UVXY. They're probably long those calls, and they're hoping for a nice pop and ball at the end of the day. And I think we flirted with that ever so briefly. How high did we get today? I got to 790 only, so we just kissed it. That's again, I've said it before, I'll say it again. UVXY can be a heartbreaker, and that's just one example. 24,000. I got to imagine a good chunk of those folks are sitting there saying just a little bit more before the end of the day. And it doesn't seem like we're going to get that out there. And then let's round up the rundown here with everyone's favorite VXX listeners. VXX was at a 1535 when we kicked off the show, up a whopping 0.35. That's pretty much all you got on the week, and it's pretty much still there right now. Starting to do a little bit more paper, like we said. 58,000 contracts on the tape. The ADV is 65,000, starting to tick up again, up about 3,000. Again, a lot of people, myself included, have kind of washed their hands of trading this thing because they've just been burned too many times. It still is worth watching. As you said before on the show, it's a good little surrogate. If you don't have time to go check the term structure, VXX is a good little surrogate to have in your back pocket for that. But from a trading perspective, I don't really dive into it too much. The big position out there in VXX right now, about 28,000 of the Jan 15 calls. Mr. Rock Lobster, anything catching your eye out there this week in either SVIX or UVIX or UVXY or VXX, sir?
Yeah, I mean, I thought the UVXY, again, at the beginning yesterday, maybe it has a shot to go to 6.5. But it certainly did not do that. And the market really handled the Powell testimony like badly. I mean, you can't dice it anyway. Yeah, it had an all-time low at 683 on Wednesday, and then he started talking. And I have to say, I mean, pretty much since then, it's been straight up. So you have to, if you're trading, you're looking at this and you're like, wow, those vol futures are still going up. And as of today, I mean, they're not closing on the high, but they still closed higher than they opened the day. So just be cognizant that, there's still, the vol futures are still catching a bid. They're not going south yet. So that generally is not great news for equity prices. And that's what I would say there for, UVXY and the volume. For UVXY to get to $10, right, it would be an enormous move, right? Because 1.5 times the futures, so you're talking about, 25 or 30% jump in the future price, at least, which would be $3, $4, $5. So you would need those January futures here. Let me do a calculation. So in order for UVXY to get to 10, I think we would need to see a 30 handle in January. Yeah, if we need like a 31 handle in the January future for UVXY to get to $10. So again, there is enormous amount of decay built into UVXY. It's decaying at roughly, I'm looking at the number right now. Wow, it's decaying at 7 cents a day. So, remember, like all the future the UVXY by next week is 100% January. That thing is sitting tip top at a 25 vol. Now, again, we'll see what happens Monday, but I think there could be like a little shorting opportunity, like from 8 to 7 in UVXY. And if you look at like the D's 23 8 puts are 47 cents. So it's kind of, there's an opportunity, but the market's got to kind of behave a little bit for us. You need to see that happen. And it's not quite happening yet. So anyway, just as listeners is, that UVXY, all those products get real heavy into January, and then we'll see where things go, especially, as the month progresses when there's not much news coming out. Earnings, I don't think earnings have been terrible. They just haven't been, enough to justify some of the super high valuations that we had, in 2021 for sure. So I would say the vol products are poised, maybe not a short today, but, definitely worth looking at and keeping an eye out going into next week. These are not trading recommendations, but that future premium is pretty juicy, and you do need some heavy continuation in order for it to maintain. So that's what I would say on that score.
And we need some heavy action in order to maintain my crystal ball streak for the year. Let's see if it's going to happen. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the Crystal Ball, the portion of the show where we attempt to wrestle with the vol gods and pin them down for the coming week. And Mr. Rock Lobster, yet another week where I was the only brave soul who dared to venture at a 20 handle or above. Everyone else was 20 handle or below. Your compatriot, the Meatball, was at an 1881. He was feeling crazy town. Even Simon, our buddy Simon Ho, was at a 20s. He was flirting with the teens there. I said, no, I'm the only brave soul who's going north. 2133. Alas, sir, was not high enough. 2215 in spikes right now. 23, pretty much even. 2306 in VIX. I was close, Mr. Rock. I was the closest, but no cigar. If we did this show yesterday, man, I was a bullseye in spikes. I was right there. But we all know what a difference 24 hours can make, Mr. Rock Lobster. So I get the closest award. But alas, no crystal ball for me this week. No bullseye for me this week, Mr. Rock Lobster. Really quickly, our listeners. Looks like the closest was Frank, who was scumming me at 2120. Frank, you scumbag. But so let's see. I'll have our producers go through, see if any others. That's the only. Oh, no, I see a 2180 for Nichols. That's not bad. It's closer than me. Still not within our 10th of a point, but close. You're about 0.4 away, 0.35 away on spikes, Nichols. So not bad there. So, Mr. Rock Lobster, the vol gods have smiled upon you. I was right, but not right enough. But I was more right than your Meatball, at least. So that's good. So you get to go first. What are you feeling for next week?
I mean, we do have the holiday and we have the slow grind down. It wouldn't surprise me if we were very close to this number by Friday of next week, because we have a full 5 days. You're going to get some discounting. So I'll say cash VIX on Friday will be, see, we're just trading around 20. I'm going to say 22.25.
22.25. Actually, we had Russell on last week. I was looking at the wrong notes here. We had Russell on last week, and I was at 21.25. My level was about the same. And then we had Russell at 19.5, and you were on last week, and it was 19.25. So all of you guys were in the teens, and all of you guys were still wrong. I just wanted to point it out to different people who were equally wrong. All right, let's go to this week for here. What'd you say? 22.25? Is that what you said?
Yes, 25. Jerome Powell screwed me. I'm just blaming him. I'd like to be angry at him, but you know what? I closed so many VIX puts on Tuesday knowing that this is what happens. This is how the screwage happens. Vol gets super low on into the note. You're like, take the money when you got the chance is all I can say. So, which is what it is. So I'll thank Jerome for that.
I've been flirting around this level for the last couple of weeks. I've been close, but no cigar for 2 weeks. Can I take myself into the end of the year? I don't hate my level where I have been the last couple of weeks. I will tell you what, I'll take it down a notch to make it a little bit different. I will say 21.20 for next week. So that's your correct prediction. The Rock Lobster at a 22.25. We're getting names coming in from listeners. A lot of 22 handle, 22.40, 21.30. Option God, you're scumming me. Frank, 23. 2035s, all kinds of stuff coming into the chat there. Get it in if you're listening live. If you're listening after the fact, get your prognostications in quickly. We like to get them in by the same day of the show, listeners, so it's at least within the same realm. We don't want people guessing on next Tuesday what vol is going to be for Friday. That's no fun. That's cheap. All right, listeners, that music means we have come to the end of yet another interesting journey through the world of vol. If you are on the on-demand side, that will conclude your broadcast week. I want to thank you for joining us throughout the week, making it such a fun week and indeed a fun year for all of us here on the network. If you're on the pro side, hang out, have fun. We'll pump some fun stuff into the live. We'll be back in a little bit less than an hour now to talk all the week's worth of weirdness on options oddities, and then back again immediately after that, because my producers love you pro folks and they hate me, with the pro Q&A. So I get no rest for the wicked today, listeners, with Uncle Mike Dussault. So a whole bunch of pro fun coming at you immediately after this show. If you don't want your week to end with vol views, you know where to go. TheOptionsInsider.com/secret club. Cool link just for you. And Mr. Rock Lobster, where can they go to get some cool stuff over there in the land of the pit?
888-TRADE-01. My Spy Master, just again, talking about that same exact strategy. Like, okay, 11 wins in the last 12 trades, and I think I have 17 in the last 20, something like that. So As a strategy, works pretty good. You want to learn how to trade vol VIX versus the SPY. Good place to check out the Spy Master. So that's rolling along nicely in this turbulent market. So 888-TRADE-01, ask for Ted. And I also launched my easy button. If you want to learn how to vol-based trades, check it out. You just push the button to get a trade, and all based on option pit vol methodology. So check that out if you are interested. I launched that last night, and I have 2 of the trades on. They're both green already. We're going to need a couple more days to see if the market moves. All right, and that's what I got.
No similarities at all to the Office Depot or Office Max easy button. If their lawyers are listening, it is a complete coincidence.
Yes, it's a total coincidence.
Total coincidence. Check it out, optionpit.com. And you know where to go to learn more about all things vol. New destination listeners, not just myxoptions.com/spikes, but thevolatilityhub.com. It's got spikes there. It's got Sparky. It's got Viking. It's got everything you want to know about vol. All there in one handy URL, thevolatilityhub.com. I see it. Frank chiming in says, I actually think that I posted my guess right when you said yours last week. Okay, Frank, maybe we were simultaneous last week. Maybe I'll give you that. We'll see. But I got my eye on you. I think you were scumming me last week. This is going to do it for Vol Views. Thank all of you again for joining us this week. We love you all. Have a great weekend. Pro folks, we'll be back in a little bit. For the rest of you, we'll see you back here on the option block on Monday all the way through to next Friday. Another episode of Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you SPIKES volatility products. SPIKES options and futures are traded on the SPIKES Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about spikes at myxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.